Welcome back to Morning Trade Live. Time now for the chart master. Jenny Horne goes through the fundamentals. Kevin Green will go through the technicals. We've got a few analyst calls in focus this morning. Let's start out with beverages. We've got Anheuser-Busch getting some love this morning. So Jenny, take us through that.
And in need of this love here is this name has been just, disappointing on a year-to-date basis. It's holding on to a slight 5% move on a 12-month basis, but still down about 6% on the year. So today, the optimism is coming out of UBS, which did upgrade shares to buy from neutral with a price target of roughly $77.32 a share. That was up from $68.19 a share when converting to U.S. dollars. They said the company is on the cusp of a significant free cash flow inflection, and its $15 billion worth of excess cash can support accelerated cash returns from here. They also did call Inbev a cash machine. So that's encouraging. Definitely an environment where we're having cash on hand is obviously very important right now, especially because consumers are still taking on a huge impact of higher prices. And this company is no exception. But overall, there's 12 analysts that do cover this name. There's 7 buys, 5 holds, and not a single outright underperform or sell. And the average price target right now is roughly $72 a share. So that implies some decent upside, obviously, from where we're currently trading just below $61 a share.
All right, some upside it looks like there. But Kevin, what are you seeing in the chart for this one?
Yeah, so if we're looking at a one-year daily chart, the trend is still to the upside, but Jenny's right. It's been very hard to be able to maintain the gains when we see price advances, and you can actually kind of see that last year. We had a couple of consolidation patterns here. The first one to note, we saw this descending channel to the downside, a bearish signal to say the least here. And then we had a pretty decent earnings announcement in October. The stock did break that channel, and then it started to trend higher to the upside here, utilizing that 20-day SMA as an area of support. But once again, we saw another consolidation, expanding descending line, which is just descending channel, which is just showing volatility within the market. We did see it pop up and then an immediate reversal to the downside, which is actually a bearish formation. One thing to kind of look out for here, that $57 level is going to be a key area of support. If we do break below that, then look at 55.60 and then also 52.20. Those are going to be your 3 areas of support for this stock. And when you're looking at the MACD, is trying to bottom, but we haven't really officially bottomed out yet. And when you're looking at the RSI, for the most part, it's making higher highs and higher lows on a relative basis here. So the chart, for the most part, trying to recover some of the losses, some of that price action here, but the velocity to the downside is something to just be notable of. And once again, that break of the $57 level, I think, probably opens up the potential for continued downside move.
All right, let's pivot to another company that is getting some love this morning. That will be IBM. It got an upgrade this morning. So Jenny, take us through some of the details on this one.
Yeah, and a nice move in reaction to this news. So Goldman Sachs did start coverage on IBM with a buy rating and a $200 price target. That implies about 16% optimism from Friday's closing price. But they noted that the industry right now is in the midst of a cyclical correction driven by IT spend constraints from these macro pressures across a range of industry verticals and a near-term shift in spending priorities towards AI-focused CapEx and away from software and services, which is definitely a theme we saw this past earnings season. They believe that IBM, though, is on the path to success to complete its pivot to this long-term growth driven by the improvement of infrastructure software assets that are now focused on open source and AI offerings aimed at their enterprise business transformation. And I have to really commend them for their business transformation, because outside of the pretty massive move to the downside we saw on their last earnings call, this name has been one that has been so consistent, actually, and relatively, I'd say one that has surprised me to the upside. The fact that we are only off of all-time highs by 10%, I know that that's something that doesn't mean a lot in the world of tech right now, but I just think that they have done such a great job continuing to rethink and reform their overall business to adapt to today's tech world, because I do know that IBM is one of these names that's like the Dow staples, and it's seen as more of like an old school tech name. But hey, they've done a good job really foraying into the world of AI and being now one of the more, I'd say, compelling tech stories in the AI story.
Yeah, it is definitely an old school company, a legacy tech company. Kevin, take us through the technicals on IBM.
Yeah, so IBM has been trending to the upside here, but it has taken some time to be able to consolidate, and I actually have that highlighted around point A, if you will, Last year, we saw a consolidation between September to October, and then we saw another consolidation or flag pattern between December and January. Now, the stock did actually gap higher on January 24th, gapping from $175 up to $184, and then it actually consolidated and kind of plateaued, if you will. And now we actually did fill that gap, which is not a bullish signal, to say the least, because this will be the first consolidation pattern that we are not seeing at the current highs. But the market is trying to really test that gap right now, actually on an intraday basis, trading at around $177.58 at this point. But let's look at some areas of support. Looking at $159 as your first area of support. If it breaks that, $148.50. And then the last one, $136.42. Now, the MACD is trying to break above that zero line, and actually probably has done it already here today, which is overall bullish. And RSI, once again, is trying to hinge to the upside here. I would say this is more bullish than bearish, but that breakdown and that gap and the ability to not really sustain those higher highs is something to just be mindful of. But maybe we are seeing a little bit of a break. Maybe we see some positive fundamental news coming in for this company here, and it tries to retest those highs over the next couple of months. But just kind of keep your eye out on this consolidation pattern, which has been lasting for about a month and a half right now.
All right, something to keep an eye on. I do wonder if sometimes if something at play goes to what Jenny said, with it being an old school legacy company, is not a new kid on the block. But let's pivot from tech to fintech. Block also getting some love this morning. Jenny, what is the latest?
Block definitely still I see as the new kid on the block, no pun intended, because this name, well, it has actually looked, relatively, at least today, making a nice move to the upside. It has been just so consistently disappointing. And I know that PayPal's also felt some pressure this year as well, but we're down about 16% here on the year and pulled back about 26% from its 52-week highs, but still remains down about 78% from its all-time high. I even forget that this name traded just around $290 a share. But Goldman did start coverage with a buy rating, $80 price target, which offers about 27% upside from its close on Friday. Again, they do view Block as one of the leaders in small business payments and consumer fintech, which capitalizes on its long history of product-led innovation. They said the shares have been range-bound effectively for 6 years, but Block has begun scaling its free cash flow and valuation support, introducing this Rule of 40 framework. And so this name, no surprise, is fairly mixed among those that are covering it. There are 34 buys, so definitely dominant in that camp, but 10 holds, 2 underperforms, not a single sell. Average price target, though, is $90 a share. So that implies like 40% upside from where we closed on Friday. When you have an $80 price target that I thought was optimistic, the average actually surprised me. So even though the overall ratings, definitely there's still some that are not believers in Block, this name has so many price targets that are optimistic given its underperformance that I do understand the fact that maybe at this point we see, just from a valuation standpoint, it looks a little bit more balanced as far as its risk and reward.
Well, there's certainly some conviction around that one, not just from the analysts today. I mean, you mentioned the 34 buys and 10 holds and no sells. But Kevin, what do the technicals tell us about Block, the parent company of Cash App, et cetera?
Yeah, well, the chart looks like it still wants to break to the downside here, unfortunately. And, Jenny's kind of right. It's been very difficult to be able to hold gains. And we kind of have these cup and handle patterns. But what does that basically mean? We're testing highs. We trade at highs. We kind of come back, consolidate, try to retest those highs. And you want to be able to consolidate again and then break through. And we kind of have a failure of that breakout here. We actually saw the stock trading at around $80 in July of last year before dropping down to $38.85 in October. The stock then retested those highs, failed, came back, actually did trade higher, trading at $86 for a brief period of time, and then now it's flagging out to the downside. So if you're kind of looking at that box that I actually have highlighted there, that's a range between $60 and $40. Keep your eye out on that. That could be an area where buyers actually do start to step in here, or you could actually see the stock kind of reverse and try to trade higher. It did actually lose its 200-day moving average, which is actually a bearish signal. And we also have the RSI making higher highs or trying to hinge a little bit higher, for the most part bullish. And the 12 EMA has actually crossed above the 26 EMA today. And so that is a bullish signal, but not the full bullish confirmation, which you want to see that over the zero line. I feel like we're kind of in no man's land with this chart. You want to reclaim that 200-day moving average on large volume, break higher. But if not, and the trajectory continues, once again, looking at that range between $40 and $60, which I know is a very wide range to say the the least here. But the stock usually trends to where areas of previous support were met, and that's why that $40 level seems like something that could attract, could be an attracting part for the price action right now.
All right, some levels to pay attention to there when it comes to Block. Kevin Green and Jenny Horne, thanks for the analysis on Block, IBM, and Anheuser-Busch.